Welcome back to the floor of the CME Group here in Chicago, Wednesday, December 22nd. I'm Jeff Kilberg, better known in these parts as Killer from Treasury Curve. Treasury Curve's institutional money market portal. We offer cash management services to our clients. So today, the hot topic, we're looking for Punxsutawney Phil. As you can see his shadow, it's Groundhog Day. Another high in the S&P. It is unbelievable. I think more importantly, people are looking for Punxsutawney Ben. Is Big Ben going to be buying more and more bonds? It's what they do in this kind of quiet week. A lot of moving parts, some hot topics, despite the fact it's a very muted, low volume trade today. Over the municipal bond situation, Meredith Whitney again got on CNBC yesterday, gave a sensational interview, very eye-opening. Hop on, you decide. Check out that interview yesterday on CBC. It was tremendous. Europe, Moody's talking again about downgrading Portugal. I mean, we could go through Portugal, Spain, Ireland, Greece, up and down the river there, but they're talking about a 2-notch drop in Portugal. Doesn't really seem that the market's being sensitive to the whole European zone over there. Maybe some things develop over this long holiday weekend we have coming up. The dollar's kind of found a little stability here. The euro currency is kind of, seems to be leading to the downside. So what is the catalyst here? Can we go up 1% every day in this market? I don't know, but it feels like we're not stopping. The train is humming up and it's like the Polar Express, baby, it's going north. Let's get into the Treasury talk. The Treasuries, the 30-year bond, they had 2 more buybacks yesterday. They kind of used some discretion in the market, tried to conceal a little bit, but they still ended up putting a bid into the belly. It was a little bit of a whipsaw like I spoke to yesterday. We saw that volatility. I hope you played it. They gave you that opportunity to play that. Overnight, the street is looking right now. The street sees 121.13 as a pivot. Above 121.13, we could pop up above that 122 handle in the 30-year. In the 10-year, overnight range 120.03 to 120.14. I think the street is looking for 120.10.5 as a pivot, and the street sees that above there, that they're going to go back to that level, which we hit on Monday of 120.25. It's a very, very distinct level, and I think it needs to be duly noted and be mindful if we do get back up there. The 5-year, 117.15.5 is a low, 117.22.25 high. I think the street is looking at the 5-year, that belly of the curve, at 117.20. That's going to be the street's pivot today. In the S&P, very muted, low volume session, 1249 to 1252.50. And for 1 second, I must digress. Oil. Typically, this oil trade is correlated to the S&P. I'm not sure why, but typically they've been lock and step. But here's the question of the day. At what price of oil is it bad for the economy? You start hearing about jet fuel and all these different moving parts that are, there's a ripple effect in the market as this price. So what is it? Is it $95? Is it $100? Is it $105? When does oil become bad for the S&P? I don't know. You tell me. Please hop on, comment, or get me at the Twitter handle, The Killer. I'd love to hear from you. Finally, the euro currency. I've spoke to this 200-day moving average a bunch of times. It's now coming in today at 131.16. It's a great 2-day close underneath there. I think that's important. Last night they popped it back up to 131.79. It sat right there, and now it's currently flat on the day. Looking for that 129.63 back and fill. I think the street, typically when you have 2 days or even 3 days of close on that 2-day moving average, it's going to go to that spot it wants to back and fill. So I think today, despite the fact it's Groundhog Day, he has to be mindful because all of these shoes could drop at any given moment, or Santa Claus could just enjoy as his landing gear is slowly touching down. From the floor of the CME Group here, Jeff Kilberg, better known as Killer in these parts, be the hammer, not the nail.